Well, it is a global game of hot potato in Europe, and it could burn U.S. investors at any moment. That's a perspective from Tony Crescenzi of Pimco. He joins us now for a look into 2012. Tony, just looking ahead, does the instability in Europe right now remain the focal point heading into 2012?
No question. It's what people on Wall Street call a left tail risk, which is to say that it's the big event that could occur to upset markets. Europe is taking action, but it's taking action very slowly to solve its problem. It still has what many consider a cash flow problem. In other words, money is bleeding out of Europe. U.S. money market funds, for example, had large amounts of money invested in Europe, but they've been pulling it out, and today have no exposure to Portugal, Ireland, Italy, Greece, or Spain, and have reduced exposures to Germany and France. And so the world is still de-risking, playing a game of hot potato with European bank assets and government bonds. And the only player that has the oven mitts to handle these hot potatoes is the European Central Bank, the so-called lender of last resort, but it's not playing that game. And so investors are very nervous about who will hold those potatoes that investors still want to toss around.
What's not getting enough focus heading into 2012 that you think should be talked about more among investors?
Well, we recognize at Pimco that the global growth story is not very favorable. It's not a disaster, but it's not that great. But we want to, of course, pay attention to the potential to be selectively offensive while we're being generally defensive, as Mohamed El-Erian has said. And so we want to also pay attention to the potential for upside. And I think that's where there isn't a lot of attention paid. And so while we want to be very defensive, and that's the best thing to do, is to guard capital this year, do look for opportunities where economies could outperform. And the United States is a good example of that, where growth recently has beat expectations. There are a lot of upside surprises, and so don't shut the door on the idea that things could get better while being very defensive.
What are your three big calls heading into the new year?
Well, to be the main idea forwarded by Mohamed El-Erian, which is to be generally defensive and selectively offensive. And so this means paying attention to both sides, and this will, first guard your capital against losses, and large losses potentially because of market volatility. So it's very important to avoid catastrophic losses, big losses associated with volatility, but it also gives you a chance to participate in the upside with that sort of idea. And secondly, this means to fortify portfolios with the various characteristics I mentioned about being high in quality and high in the capital structure, et cetera. And also pay attention to the new frontiers. Africa is growing in terms of attention, and people are looking and focusing there more. And so you want to take a look at that opportunity because over the long run it might present itself to be a very fabulous one if one considers the possibilities and is a long-term investor. And so the third one, I'd say, if you had to add in, is not knowable. You just have to wait and see and probably take advantage of an opportunity that arises. And so you want to be quick to move when markets afford you the opportunity in 2012.